waters. Fed rate hike fears are looming large. ECB did not announce any new easing measures. So, is there a bigger correction in store? Some of the biggest investors and market experts spoke at CNBC's Delivering Alpha conference. The key message was this: there are risks in the short to medium term, but central banks are not the only game in town.
At this stage, the risks are so asymmetric. Like, there's no doubt that you can slow the economy, the world economy, the U.S. economy. Tightening will work, okay? And when you look at the inflation pressures, you know, this is a global thing, and you look at the demographics, all of those things means that the risks are so much more on the downside.
I think there are tremendous risks, but I think anyone that's going to tell you it's going to go down tomorrow, next week, even next month or next year, it's sort of a guessing game. But you can look at the environment, and I think it's very dangerous. In other words, you're walking on a ledge, and you might make it to the end, but, hey, you fall off that ledge, you're going to really see trouble. And I think that could well be.
25 basis points will move markets only because you all have become a proxy for the markets. You wanted to move something, or else there's no news. But it won't make a difference to the U.S. economy. It will temporarily impact markets around the world, just simply because it will, and it's been years in effect, really, except for the one increase. So it's something that at some point will have to be normalized.
The central banks cannot be the only game in town. They cannot compensate for other policymakers. I think it's absurd that we are obsessing over a quarter of a point.
Right.
It's absolutely absurd, but it tells you the extent to which markets have relied on these injections of liquidity, and for good reasons. That delivered three things: the perfect trifecta: higher returns, lower volatilities, and correlations where everything goes up.
I think owning medium to long-term G7 fixed income is a really bad idea. And by removing from your portfolio things that are really bad ideas, that's a helpful thing. So it's not just, hey, go buy this, go buy that. It's sell your 30-year bonds.
All right, now let's get to corporate action. It's been